Hello everyone and welcome back to episode 16 of our investment journey here. So I'm a bit late with this trade because I was on a business trip. I tagged on 2 days of vacation, so I couldn't make my trade, and that's why I'm doing this on Monday. So yeah, without further ado, let me go ahead and go to my trading screen here. We got the MSCI emerging markets. We have €1,000 that I want to invest. Let's review the order and buy. We placed the order and now it seems like it worked. Yeah, it did. Let's go to the wealth tab and we are at a fantastic €17,500. So we're up €1,500. €410 alone came from this week or last week. And the month alone is almost 800 or 5%. So yeah, amazing results. Now let's check out what happened in the markets. Alrighty, so when we look at the market, we see that both the MSCI World and the MSCI Emerging Markets are up. And as so many times in recent memory, the MSCI Emerging Markets beat the MSCI World. And if we look at the year to date, we see that the MSCI World stands at a 1.68% gains versus almost 10% for the MSCI Emerging Markets. Now, 10% in less than 2 months, that's insane, and that will for sure not continue at that pace. But for the moment, we take it. So let's look at what happened in the markets this week. So the first story is that the Supreme Court of the United States struck down Trump's tariffs. Remember, he was out there on April 2nd, I think, of 2025, and he announced those ridiculous tariffs. And now, finally, the Supreme Court said no. So I tried summarizing this whole situation here, and you can see here my output that I got from Google. Essentially, the Supreme Court ruled that Trump cannot use the International Emergency Economic Powers Act. Okay, so he used that. He said it's an economic emergency, and so that's why he had to impose the tariffs. And the justices ruled basically that he overstepped his authority. When we get into the nitty-gritty of the situation, it gets a little bit more complicated. Essentially, 6 justices of the 9 said, no, we don't think this is legal what Trump did. And among them are both conservative justices and liberal justices. The dissent, so those that say, hey, actually we do think that Trump has those rights, those were the 3 that are all conservative judges. I'm not an expert and I'm not going to embarrass myself any further, but yeah, I found it interesting that there were also conservative justices that were against Trump here. And interestingly, also those justices that Trump nominated. So, for example, Neil Gorsuch and Amy Coney Barrett, who was the last justice selected by Trump and who I decided to put on the thumbnail, they were both against Trump here. And that pretty much means he didn't have much of a chance to begin with, okay? The Supreme Court is now solidly in the hands of the conservatives, and they still struck down Trump's tariff, so I think it's a pretty clear defeat for Trump. Okay, so what else happened is there was some division in the Federal Reserve what to do with the monetary policy. But the data came out that the US economic growth decelerated in Q4 last year. So it only grew by 1.4% annualized compared to 4.4% in the third quarter. And so they attribute this to a decrease in government spending and exports, as well as a deceleration in consumer spending. So all in all, there's some good news, there's some bad news, and the US stock exchange here, the S&P 500, hovered near the zero line. When we look to Europe, we see a very strong performance. So the Stoxx Europe 600 once again hit a new high with a 2.08% gain in local currency terms. And the key drivers were improved earnings expectations and broadly supportive macroeconomic data, and investors' desire to diversify beyond the technology-heavy US market. So everyone's a little bit scared of the AI bubble, and the US stock market is a bit shaky right now. So they just shift to a developed market that is less exposed to AI. Now, if the AI bubble pops, we all got a problem, but maybe less in Europe. Other than that, we have some news from Japan here, small declines. I think not much to talk about here. A little bit of geopolitical tensions, a little bit of announcements by Sanae Takaichi, the new prime minister. But yeah, no big story here. And then China had their stock markets closed for the Lunar New Year. One thing I found interesting is that the IMF set the expectation for China's economy to grow by 4.5% in 2026. It's a bit up from the forecast, but below the 5% achieved in 2025. At least that's the official number. And the IMF acknowledged that China's economy has been resilient to shocks, but flagged increased challenges to its historical growth model. What does that mean? Well, the idea is that China isn't going to be the workbench for the world in perpetuity and forever. Instead, they want to switch to a more consumption-led growth model, and that's something that the Chinese economy has struggled with. A lot of people just saved their money. They had this ongoing property crisis, and so people are very reluctant to just splurge. And that's a bit the challenge that you try to solve with government incentives or other things, but the Chinese government wasn't very successful with that. Okay, so what else happened? I think not much. I just saw that there were some outliers in the 1 week development here. So Taiwan up 6%, pretty insane. I don't know what it is exactly, but it is not TSMC apparently, or I'm not sure at least, but there's a lot of stocks right behind it that have pretty strong performance. So yeah, not sure what's going on, but somehow the Taiwanese stock exchange rallied without TSMC making a big contribution. And lastly, and the biggest mover here was South Korea. And I found that quite interesting. So the KOSPI, the South Korea index, hit a fresh record high on Thursday, jumped more than 3%, and that includes movements by the index heavyweights, Samsung Electronics and SK Hynix, which are up between 5 and 1.5% respectively. And so I found this one interesting here. After nearly doubling in 2025, Korea is again the leading market in Asia Pacific, Goldman Sachs wrote in a recent note. While many investors are asking if they should reduce positions after such a strong performance, we think it is still too early. The investment bank forecasts 120% earnings growth for Korean equity markets in 2026 after rising 36% in 2025. So that's pretty spectacular. Korean companies are supposed to increase earnings by 120%. I mean, wow, what's going on there? I don't even know what's going on. But definitely a market to watch out for. So yeah, that's about it for the week. I think this experiment that we're doing right here is going splendidly. And I'm already looking forward to next Friday when I make my next trade and summarize this week that we're already in. Hope to see you there. And until then, all the best.